Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to talk about JD.com and a little bit of Alibaba as well. Because yesterday we had that JD.com released full year 2020 earnings and Q4 earnings, and obviously they beat expectations once again, as well as Alibaba did basically 1 month ago. But as always, those kind of Chinese stocks, it's not like in the United States, and the stock, went up a bit, but honestly not as much. If probably you see something like that in the US, you have a plus 15% in the day. Anyway, that's not what is happening. So in this video, I want to talk about my view on that, my two Chinese positions over there, and what is my point of view, okay? What am I expecting? So the only thing I ask you is please leave me another like, it's very important and I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. So here we go, JD.com, this is the Q4 earnings and full fiscal year 2020 results, and basically the quarter itself, 34.4 billion in net revenues as a total. Went up year over year for the quarter 31.4%, and then we have the services part, services revenue, 4.9 billion, and basically increased more than 50% with the previous year. And then for the total fiscal year, JD.com has touched 114.3 billion, which basically beat expectations because my previous valuation, now I have adjusted it. However, I will put 110 billion, right? Also, when it comes to net income, basically we have that for the total year, they have closed the quarter 3.7 billion for Q4. While when it comes to the total area, 7.6 billion, the net income attributable to ordinary shareholders for the entire year, as well as cash flows with a 6.5 billion in operating cash flows, and then free cash flows, which excludes the impact of JD, Baitiao, receivables, basically the normal free cash flows. We are at 5.4 billion. So cash flow positive, net income better than expected, beating earnings, basically the lot, okay? So if you go to just watch and read the full documents, you can have everything in it. Anyway, nothing strange. So a very great earnings season for JD as well. And when we go to see the valuation here, actually I have updated everything. So I put the real actual earnings of 2020, and then they beat my expectations in net income because here I put 5%. Anyway, the real number is 6.65. But they have lower free cash flows, obviously, because they spend a lot. Okay, they invest a lot in what they're doing. So here the previous valuation was around 5.8. The real number is 5.35. So I have updated that and done a new valuation, which in my opinion is the most confident one. Very, very conservative. I cannot imagine something more conservative than this, in my opinion. For the year, 114.299 billion compared with the 2019 82.8. Basically, this is in terms of dollars, a 37.93% growth in 1 year. So what I've done, I have taken the percentage of revenue in free cash flows and basically increased it just a bit, okay, until 2028. From 4.68, which is the one of 2020 just released, to 6, just 6 in 2028. And basically the growth rates, 2021 I left the previous analyst one. Now they're gonna be probably higher, but I want to be conservative. So below 20% growth in 2021, and then 22% until 2024, and then going on to 16, right? 16% until 2028. Basically, with those free cash flows percentages, we take the free cash flows, going on requirements, 12%, discount rate pretty high, low perpetual growth, just 3%. All of that together, which in my opinion, once again, is extremely conservative. We have that the fair price today will be around 137 Considering that the price today, the real price is $89.50 per share, that means that even with this very conservative analysis, the stock is still 34.73% undervalued with an upside potential to fair price of 53.21%. An easier valuation, this one is probably the easiest one, basically it takes the revenue of 2025 and the average growth from basically now and 2025, I put 20.37%, which is basically the average of those one over there, right? Now, according to that, in 2025, we should have revenues of 288.5 billion. When we take a price to sales ratio of just 1.4, so that's pretty low, we have a market cap in 2025 of 404 billion for JD.com. Now, today, JD.com has a market cap of 137.7 billion, meaning that just with this simple valuation, JD could do 3x in basically from now to 2025. Now, why Chinese stocks are not going higher? That's the main question, because we are used to US stocks and we have seen in 2020 a big explosion, right? But the reality is that China, we don't have to forget that it is still an emerging market, considered as an emerging market. And I have said many times, even by talking about Alibaba, as I believe really that Alibaba is a fair price, at least $340 per share. But the problem with China is mainly because of, first of all, investors, foreign investors, they don't trust yet China as an investment. If you look at the market capitalization of the global stocks exchange, basically, you realize that everyone, those investors around the world, the first thing that they think of is United States. So when we think about China, there is still a lot of doubts, and I pointed out this issue, and I have those doubts by myself as well. The first thing that we can think of is transparency, right? If you don't speak Chinese, it's very difficult to actually really understand what's going on in there. Another stuff is that Chinese, for example, they don't like too much to complain with global rules. So, for example, when we look at balance sheets and stuff, we don't know exactly whether those things are true or not. So that's all those doubts that investors they have. It's obvious. Plus, especially what we have seen with Alibaba, things can change literally from a day to the other day because of decisions. So there are a lots of doubts, and that's why Chinese stocks they don't go higher as US stocks one. Because let's be honest, guys. If a company like JD, the exact same company, was in the United States, today the market cap would have been at least 300 billion. I have absolutely zero doubts about it. So is about the businesses itself? Absolutely not. JD.com and Alibaba together, but as well as Pinduoduo, all these companies, they have done very well in my opinion. Also Tencent or Baidu, another interesting one of China. However, it's the environment. Investors, they don't trust China as United States when it comes to investing. We still have doubts about the delisting, all the conflicts with US rules, so the delisting stuff, accountants, all this kind of stuff. Why Chinese stocks are not going higher, in my opinion, is simply because as of today, people do not trust China too much as an investment. They prefer to remain in the United States. And that's why basically I always told you that I was putting never more than 15% of my portfolio into Chinese stocks. Another issue is that it is not easy to have access to the Hong Kong Stock Exchange, so we need to buy ADRs, which most of the times they are company based in the Cayman Islands due to contracts, and we are not 100% sure about the reliabilities of those things. So all of that, add all of this together, and basically the results is that the businesses are doing extremely great, but their stock prices are way cheap compared with US stocks. Now, what is my point of view on that and why I continue to hold those companies? Because first of all, when we take a look at the e-commerce situation in China, we realize that China is the first country in terms of percentages of total retail sales with e-commerce sales, right? 52% of total sales in retail are from e-commerce in China. And basically you find the US with just 15%. So that just to make you understand the impact that e-commerce have in China. This is obviously forecasted to grow as basically people spend more in China. Also, the e-commerce space will keep more. And when you buy Alibaba and JD, you are buying basically the number one and the number two, which they have two different business ideas so that both of them can coexist, in my opinion, in this environment. The view here is long term. But what I'm saying is really long term. I mean, 5 to 10 years. And not because now we are used to basically you buy a stock in the US, 1 month later you have done 30%. But this is not how usually historically the stock market works. In my opinion, here you still have a 3x opportunity in the next 5 to 6, 7 years. That's why I continue to hold those stocks. For basically now at the moment is around 13% of my portfolio. Not because I sold, but simply because US stocks, they have performed well. And then in the recent dip, I bought more Tesla and Palantir so that I have increased my US positions. But overall, I remain bullish in the long term. What I really expect and what I would like to see is not the business to do better than what they're doing right now. In my opinion, under a business point of view, they're doing extremely great. What I would like to see is actually for China to open more to foreigners investors, right? To make those investors trust to put money in China and Chinese stocks. And I think that in the next 5 years, this is something that probably will happen when China realizes that if they do it, they can attract way more money because there are a lot of opportunities there, in my opinion. And also in terms of valuations, things are way more fairly priced compared to actually very high premium stocks sometimes in the United States. So we are gonna see whether that will happen. As of now, I continue to hold JD and Alibaba, and this is my point of view. So obviously we need patience. I know it is frustrating when you see all the other companies in the US going sky high, but this is a long-term bet that I do because I believe that China in the next 5 to 10 years will do great, and the e-commerce space will do very great there. But overall, I remain, as of now, I have 87-88% invested in the US. So obviously, I'm not missing those opportunities over there. This is just for portfolio structure because it is something that I believe that long term can make sense. Anyway, it's just my point of view. It can be wrong, can be right. I have no idea. Just leave me down a comment with your opinion, and I hope you find this video interesting. Leave me a like, subscribe to the channel, and as always guys, have a wonderful day.